I think we can see a second wave of panic into the Bitcoin ETF from people. I was speaking to a good friend of mine who's a kind of very well-known hedge fund manager, or ex-hedge fund manager, and one of the billionaire crowd. He's like, so much wealth is getting made in crypto, it's making the billionaire class nervous. He's like, okay, there's two groups here who all they care about, they're so rich, all they care about is where they fit on the rich table. He said they're all going to panic that they're going to lose relevancy. So they're going to panic in. They're going to panic into Bitcoin, the Bill Ackmans of this world and all of these people.
The crypto bloodbath continues, with most top cryptocurrencies down by at least 6% in the past 24 hours as of press time. The CMC Crypto Fear and Greed Index, a metric for measuring market sentiment, is still on greed, but has dropped to its lowest point since early February, indicating that investors are wary of the pullbacks, especially with the 2024 Bitcoin halving event just days away. The bad press has started in full swing, but Real Vision founder and CEO Raoul Pal, a respected figure in the industry, says it's all part of typical crypto bull market dynamics. According to a recent post he made on social media platform X, a bull market's job is to throw off and discourage investors. So, it's not unusual to get as high as 35% pullbacks before things get heated up again. Pal's optimism about the bull market stems from more than typical crypto bull market dynamics. In fact, the renowned macro analyst says there is a very high chance this is not your typical bull market, and the market is only taking a brief respite before prices take off massively again. During a recent interview with the Bankless podcast, Pal shares an insightful conversation he recently had with a well-known billionaire former hedge fund manager. According to the mysterious billionaire, the TradFi billionaire crowd is getting antsy about crypto bros someday surpassing their wealth. It's gearing up to be a case of, if you can't beat them, you join them. In addition, the billionaire former hedge fund manager says the commercial real estate guys are also looking for a way out of their sector's drought, and they all seem to have set their sights on the cryptocurrency industry. Pal believes most of the coming demand will come through BlackRock's IBIT and other spot Bitcoin ETFs, marking the second wave of demand for the new products merging the multi-trillion-dollar TradFi world and the cryptocurrency space. This prediction underscores the potential impact of these new products on the cryptocurrency market. Pal is so bullish on this coming wave of demand that he predicts Bitcoin will hit at least $200,000 before the cycle ends in 2025. That's his base case. His bull case is that things could get quickly more heated if the demand puts more pressure on the limited supply, and we could see Bitcoin get as high as $600,000 per coin before the cycle ends. As we bring you clips from Pal's discussion with Bankless, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also join the conversation by dropping your comments and observations in the comment section below. Thanks, and enjoy the video. Today's video has been brought to you by CyberGhost VPN, a fast and secure VPN service offering comprehensive digital privacy. In today's world of widespread cyber espionage and spying, your privacy is never assured online. Whenever you click on a link, go on social media, or shop online, you risk huge privacy breaches that could get your account information, passwords, and other personal data into the hands of rogue players. However, with CyberGhost VPN, you can browse the internet freely because you are assured of full, comprehensive online anonymity and privacy. CyberGhost is a strong virtual private network service that offers blazing fast browsing speed, public Wi-Fi protection, full encryption of all your data. Neither Prying Eyes nor CyberGhost itself will have access to your IP address, browsing history, session duration, and other vital information. It is currently available in over 100 countries, with over 38 million users and an excellent rate on Trustpilot. CyberGhost is offering savvy finance viewers a rare opportunity to secure up to 7 devices with just $2.03 per month, with 4 months free and a 45-day money-back guarantee. CyberGhost works with Windows, Mac OS, Android, iOS, and many others. You can finally access geo-restricted content from websites, including YouTube, social media platforms, and over 40 streaming services like Netflix, Hulu, Amazon Prime, Disney Plus, and many more, and find better deals online, all while staying completely anonymous. Please click the link in the description box below to enjoy the amazing offer and start the journey toward complete online privacy.
Spoken here before, this is all driven by the liquidity cycle. It's actually a macro cycle driven by the refinancing of government debts, because everybody reset interest rates to zero in 2008. They set their government debts all at 3 to 5 years, gives us a 4-year cycle. That was the exact point, the launch of Bitcoin. It's also the US presidential election cycle. It's all the same thing. And election cycles, they give out candy to the kids, which is their way of stimulating. So it's all part of this stimulus cycle and debt refi cycle. So I don't think that changes because the debt issue is still too big. Okay, so what is the nuance of the cycle? Normally, we've only got 3 data points, but the crypto spring, which is the first year after the bear market, this has been a strong one. You know, Bitcoin was up 150% or whatever. So that's pretty strong because we brought an extra source of demand in, as you allude to with the ETF. Crypto spring transitions to crypto summer, and that's usually happens after the halving. And after the halving, you see something that I know everybody's getting shit for right now, is if you go back to 2020, after the halving, what happened? ETH Bitcoin bottomed.
Right.
And then it slowly based, and then it started outperforming, right? That's when the market takes on risk and goes out the risk curve. And that's when you start to see Bitcoin dominance coming down, all of that kind of stuff. That's what the summer is. It's also altcoin season. It's when we hit what I commonly refer to as the banana zone, when everything goes bananas, right? The bit of crypto magic. Now, this banana zone is interesting to me because we've got this new source of demand. This is the most reflexive market ever, because the more people join the network, the more the price goes up. The more it encourages people to join the network, the more the price goes up. And obviously that reflexivity works in reverse, which is why we get strong bear markets. But basically, the world is underweight this asset because it's still a new asset and it's an adoption curve. So over time, more and more people join the network as investors or users. People see Bitcoin going up, and then you hear that your mate, you're playing golf or having a drink, and he made money in it. And then you think, I've got to make money in it. And this is the reflexive loop. So that's what crypto summer is all about. It's the FOMO, the madness, the insanity that crypto becomes. But it also drives adoption, drives money into the VC again. It flushes money through the system, allows people to build new product, which is the next cycle's gains and all of this stuff. So that's great. And then we go into fall. And this is where the complications lie. Crypto fall, which we historically 2025, they've generally finished at the end of the year. We don't really ever know exactly. I think this cycle's maybe started a bit earlier. I don't know. And falls can be the most tricky part. This summer is the easy bit. You just shut up and do nothing. And number go up. Fall is tricky. So if you go back to 2013, we had a 50% sell-off. People thought it was done because it had already gone up, I don't know, 20x or something stupid. It then corrected 50%. Everyone thought it was over. And then it moon rocketed in just a way you can't comprehend. Then you get to 2017. Same. 2017, everyone kind of thought it was over early summer. And then it did, I don't know, 10x from there. It was bananas, right? That is really hard to deal with because 2021 was a stunted cycle. We never got the accelerated final leg. We had the huge correction. It went up, poked its nose back up in the highs, collapsed. Everyone's got PTSD from that. The real money was made in those previous 2 bull markets in terms of percentage returns. Everyone now assumes it can only go up 3x from the all-time high. There is actually no evidence of that. Maybe something was weird in the last cycle because the other ones did a lot past the all-time highs.
During the interview, Pal also gives 3 important scenarios he envisions could play out over the next 12 to 18 months. His first scenario is that Bitcoin and other cryptocurrencies will make new all-time highs in 2024, just like it has happened during previous bull markets. This less optimistic scenario accounts for only regular crypto fundamentals, namely the halving event and typical 4-year bull and bear cycles. The second scenario is deeper and more bullish, as it accounts for the influx of new wealthy investors and tens of billions of dollars making their way into the cryptocurrency industry through the spot Bitcoin ETFs. In this scenario, it is anyone's guess how far prices could move. While Pal gives the first scenario a higher probability of occurring, he explains that the chances of the second scenario playing out are becoming higher and higher due to the increasing interest in the spot Bitcoin ETFs. Let's get back to the interview as Pal delves into all three scenarios, as well as how the macro environment could influence the crypto market in the coming months.
So how I think of it is a distribution curve. Middle is, it kind of does what it's supposed to do until sometime mid-H2 2025, it tops out, okay? That would be normal. That would be Bitcoin as a price target of, call it 200,000. Something like that. 3x the all-time high kind of thing. I would give a 60% probability. I think there's a 20% probability that people who are calling this a left translated cycle, i.e. we've brought forward demand because of the ETF, it dries up, we're overperforming for this stage in the cycle. I think people saying that tend to be one cycle people because they only saw the last cycle, because others have outperformed earlier on. So anyway, okay, there's a 20% chance of that. Then there's a 20% chance that this turns into a full-blown bubble cycle, a 2013, 2017, because of this new dynamics. You throw in an ETH ETF as well. You throw in, the $65 billion of VC that went into the last cycle. Somebody comes up with some killer applications. Before you know it, there's 200 million people playing a game. There's, stuff like this going on. Okay, that could create something crazier. And I'm continually assessing these probabilities in my head. And because there's so many people who I've noted have PTSD from the last cycle, the stunted top, it's left translated, they're going to take it away from us, starts to move my probabilities that you get a correction and then a spike. You can't predict that because everyone's going to hate you if you're wrong. Like I got hated at the top last time by thinking we were going to have that. Right. So it's also very difficult to manage. So it's complex, I would say, but we don't have to care this year, which is lovely. But let's look at the scenario where rates don't come down much.
Sure.
Because that's what people are worried about. Let's assume that they do manage to squeeze in a few rate cuts, 75 basis points. Well, that reminds me a lot of 1995. In 1994, we had a massive move in rates. Banks went under, same situation. Markets puked. They hated it. And the Fed, everybody thought there'd be a recession, didn't get one. And the Fed cut twice or three times, 75 basis points. Nowhere near where it would come back from. And they kept them on hold, basically, until 1998 when the Asian crisis came. They cut it a bit and then raised it once and then cut it, but nothing really. It was basically stable rates. So everyone's like, well, if they leave rates here, well, that's nightmare for the markets. Well, the cost of 5% interest rates in a market that does what? ETH does about 175% a year annualized. So 5% interest rates are irrelevant, which is why you can have funding rates of 65% and people still pay them. Secondly, back in 1995, 96, 97 into 98, the market went up, the S&P went up 160%. And that's when people would say inflation kind of rebounded a bit. All of the usual stuff was not bad. The markets don't like rate of change. Stability, more than happy with. Everybody adjusts their cost of capital and everybody carries on their business. Now, obviously, if you bring rates lower and they bring it lower faster and they push more liquidity, liquidity is actually the big thing in the system. And, there's various ways of measuring liquidity, but liquidity has been rising, global liquidity, not by much, but enough that bottomed the crypto markets and everything else. And the forward-looking indicators suggest liquidity continues to come into the system. And that liquidity ends up flowing down the risk curve or acts as a debasement of fiat because it's a global liquidity measure, which optically pushes up the price of assets.
Thanks for watching the video, and much gratitude to our sponsors. Remember, there is a very special offer in the description box for you. CyberGhost VPN is fast, secure, totally risk-free, and offers top-notch data privacy at only $2.03 per month with 4 months free. So, please check it out by clicking the link. Thanks. There have been a lot of mixed signals from central banks, especially the US Federal Reserve, about rate cuts. The leading concession among market participants is that rates will never go down, at least not back to the pandemic levels. However, Pal believes the massive debt load means central banks have no other option but to cut rates significantly and turn on the money printers again. Pal believes there is no way the Fed, for instance, will be able to make interest payments on the massive $34 trillion debt load with interest rates at 5.5%. According to the former Goldman Sachs executive, this is exactly what the gold market is sniffing, which is why the leading precious metal has made new highs multiple times in 2024. But even if the Fed funds rates stay high, Pal is still emphatically bullish on the cryptocurrency market in 2024 and beyond. What are your thoughts on Raoul Pal's interview and predictions for Bitcoin and the entire crypto industry in 2024? Please drop your comments and observations in the comments section below. Also, ensure you subscribe to the channel, turn on post notifications, and hit the like button for more videos like this. Thanks for watching.